What is Bitcoin? A complete guide for cryptocurrency beginners. Bitcoin is a virtual currency that's generated through blockchain technology. It's decentralized, meaning no bank or government can control it, and anyone with internet access can use it. Anyone who owns Bitcoin can also transact online or in person without paying any money. This is because Bitcoin's public ledger system allows people to keep their transactions private by making them untraceable. This is a huge tech breakthrough that's going to change the way people transact online in the future. What is blockchain technology, and why is it so important? Blockchain technology provides a secure network on which Bitcoins can be transacted. Every time someone makes a transaction, it needs to be verified, which means that a group of decentralized computers that all run Bitcoin software will confirm the transaction's validity. These computers are called miners, and they're rewarded with new Bitcoins when they confirm transactions. This creates new Bitcoins, which is the only way to create more. Once a Bitcoin has been confirmed, it goes to the miner's wallet in their blockchain system. The blockchain provides a public ledger that anyone can view and no one can alter. No one can hack or manipulate it either, because if they were to do so, it would create a fork in the system that would be very noticeable and easily invalidated. A fork happens when there's a disagreement between the miners over the validity of a transaction, which means that some computers aren't on the same page. Once one computer registers a transaction, all its peers will check it to ensure it's valid. It's like a waiter coming to your table at a restaurant and asking if you'd like to order. If you don't order anything, he'll come back in 5 minutes and ask again until you do. What are cryptocurrencies? Digital currencies like Bitcoin are also referred to as cryptocurrencies because they use cryptography for security instead of a central bank or government. A cryptocurrency is also a medium of exchange like any other fiat currency. This means that it's used for buying and selling things and can be exchanged for other currencies. Just like a dollar can be bought and sold for euros, Bitcoins can be bought and sold for dollars or euros. A major third party does not issue most cryptocurrencies. Instead, they're created through a distributed computer network that verifies transactions. What is Bitcoin? Bitcoin is a type of cryptocurrency. It was created in 2009 by someone using the alias Satoshi Nakamoto. Bitcoins can only be created through a process called mining. This means that people who control powerful supercomputers that use cryptographic techniques to create Bitcoins get rewarded with additional Bitcoins in their wallet as proof of their work. The whole system works on a decentralized network. It cannot be manipulated like other currencies, so it's very difficult to counterfeit digital currency and avoid paying taxes. Bitcoin, abbreviated as BTC, is a form of cryptocurrency or digital currency introduced into circulation in 2008 by an anonymous entity using the pseudonym Satoshi Nakamoto. It is not a tangible object, and all transactions are confirmed by distributed nodes on the internet and recorded in a public ledger called a blockchain. Blockchain can be thought of as an electronic ledger. The owner approves and verifies each transaction before it may be processed. Bitcoins depend on a set of private and public keys, which safeguard both the payer and the payee during the transaction process. A public key is analogous to an email address, while a private key serves the same purpose as a password for an email account. These keys protect access to your Bitcoin and should be guarded just as carefully as a password for an email account. How does Bitcoin work? Bitcoin is a cryptocurrency, a digital currency, that's completely decentralized and allows anyone to send money to anyone else without needing a bank to do it. This is done through a public ledger system, like blockchain. However, rather than using it for keeping track of people's accounts and balances, like banks, Bitcoins are used for peer-to-peer transactions. Bitcoin is not issued by a central bank or any other single entity. Instead, it's created through mining. What is Bitcoin mining? The process of mining Bitcoins is to solve complex mathematical problems. Those who create a block in the blockchain are rewarded with Bitcoins and added to the ledger. It's an incentive for those who observe the system to support it financially by keeping their computers running and working towards solving mathematical problems so that they can be rewarded in Bitcoin. It also encourages more people to join the network because of how the system works, making it economically feasible for more people to secure a Bitcoin. How are Bitcoins created? Bitcoin is a digital currency that has no physical form. It's not tangible and can be used as a store of value for people to store their wealth and exchange it for other currencies. That being said, it's still important to understand how Bitcoins are created to fully understand the technology behind them. Bitcoin mining is adding transaction records to Bitcoin's public ledger of past transactions or blockchain, formerly known as the blockchain. This ledger records all transactions and is shared by everyone on the network. As more people are added to the network, their bookkeeping is combined with everyone else's and is used to create new blocks of recorded transactions. This ledger uses complex mathematical algorithms and computerized proofing tools to process each block and ensure that no one party can tamper with the records without being identified. The first miner who creates a valid block when there's a disagreement over what version they should run will receive special bitcoins known as pre-mined bitcoins. Bitcoin mining is the process that leads to producing new bitcoins and is named after the cryptocurrency itself. Bitcoin miners, like someone digging in the ground for buried treasure, are rewarded with bitcoins for their digging efforts in the same way. Mining bitcoins is analogous to digging in the ground for buried treasure. But what exactly are they expected to do? What do they have a passion for? A Bitcoin miner is required to complete the 2 tasks listed below to generate bitcoins. Contribute to the management of the ledger by validating 1 megabyte (MB) of transaction data. Compete against other Bitcoin miners to determine whether your answer is correct or the one that is closest to the correct one. The first portion is straightforward and does not require any further elaboration. The second portion involves some thinking that is more analytical. To generate bitcoins, it is commonly believed that miners must first solve a difficult mathematical puzzle. However, this is only partially accurate. They work to generate a hexadecimal number with 64 digits, which is known as a hash, that is as near as possible to the desired hash. The procedure, known as proof of work, generates a new block, which miners then add to the blocks already in circulation to keep the system operational. The miner whose hash is the closest to the target will win the competition and be awarded 6.25 bitcoins when 2020 rolls around. The number has every 4 years. The process known as Bitcoin mining is how new bitcoins are generated whenever there is a new miner. Why is Bitcoin so revolutionary? Bitcoin is revolutionary because it allows people to store their wealth digitally in a secure place for free. No banks are involved in the transaction processes, so you can be sure that your money will remain yours. It's digital cash held using cryptographic keys. It's also easy to store. You can use a digital wallet available on your computer or mobile device. Bitcoin is the opposite of physical cash because it cannot be traced to identify the owner. Another revolutionary aspect of Bitcoin is the protocol method for transferring value. You can send wealth almost instantly, anywhere in the world, and it's actually free. In addition, all transactions on the network are confirmed at least every 10 minutes, and all transactions are public to discourage fraud. Every time you send Bitcoin out, someone can see it, but they cannot link it to your identity without knowing your private key. Why invest in Bitcoin? Bitcoin has only been around for a few years, and it's already seen huge growth. In 2013, the value of each coin grew by a factor of 2,200%. Since then, it's been attracting investors from all over the world who have seen this investment opportunity as a great chance to cash in on the digital gold rush. Although there are no guarantees in investing, it's clear that Bitcoin will change how people do business forever. It's set to become a global currency that can buy almost anything. Furthermore, Bitcoin is still new and needs more time to grow and develop. The value will continue to rise as technology is used more widely. There are plenty of possible ways of making money in Bitcoin, but you need to identify those areas that offer the most growth potential and will bring you the most return on your investment over time. Advantages of Bitcoin. Self-governing. Bitcoin gets away from the control of any single individual or organization. Decentralized control. Because of Bitcoin's decentralized nature, there is no central point of failure and no way to shut down the entire network. Trust and transparency. All transactions on the blockchain are publicly seen, so there's no need to worry about a rogue employee or business partner. Furthermore, there is an improved level of trust involved in all transactions because you can easily verify the history on the blockchain and trace any previous ownership or payments made. Fictitious transactions. Bitcoin transactions can be easily made to look like they're made in the real world. For example, you can make a transaction look like it's coming from a local credit card company or a company in China when someone in Spain is receiving the payment. Low fees. With Bitcoin, you only pay for the benefits and never pay for any of the fees associated with receiving Bitcoin. International transaction. This is one of the most significant advantages of Bitcoin. It provides individuals with an easy way to send money to anyone, anywhere in the world, without paying large transaction fees. Security. Bitcoin transactions are kept secure by using public and private encryption keys. Even if hackers get into your wallet, they'll be unable to take out your funds without knowing your private key. Peer-to-peer body. Bitcoin is a truly peer-to-peer system, so there's no need for intermediaries who charge high fees. Increased privacy. There are some instances when Bitcoin accounts will be more private than those for traditional banking services. For instance, if your Bitcoin account is pseudonymous, if you don't use your real name, and you pay for everything in Bitcoin, it becomes much more difficult to trace these transactions to you. Nominal fee and speed of transaction. Sending Bitcoin to another address is instant and doesn't cost you a single penny. Irreversible transaction. Bitcoin transactions can't be reversed. The immutability of the blockchain used by Bitcoin is one of its most significant selling points. Because of this, transactions conducted using the blockchain cannot be undone and do not require the participation of any third party, such as a centralized government or the agencies of financial institutions. It is not feasible to request a refund for a Bitcoin sent to another individual, even if the Bitcoin was sent to the wrong recipient. The only way to reverse a Bitcoin transaction, in the sense of speaking to the person who received the Bitcoin transaction, and can be received by having the receiver pay back the original Bitcoin, is to have the recipient return back the original Bitcoin. Easier to use. Bitcoin allows you to send and receive Bitcoins from any device, regardless of the platform or software used to make the transaction. Conclusion. Investing in Bitcoin can be a very profitable and rewarding practice, but many scams, frauds, and schemes are developed to take advantage of the general public. To avoid potential pitfalls, research the products you're interested in. Look out for scams and fraudulent operations, invest only a little, and ensure that you only deal with reputable companies or individuals. The tips above should help you get started as a Bitcoin investor and protect your money from thieves. Bitcoin adoption is growing in the US and around the world. In regions like Japan, where regulations on Bitcoin have been lax to date, developers are finding ways to incorporate cryptocurrency into their business models. These are exciting times for any developer or entrepreneur considering using Bitcoin in their project. Undoubtedly, using Bitcoin to buy real estate will become more popular in 2018, as well as other services.